All right, so this morning, Goldman Sachs, they rang the bell, folks, that buy the dip bell. Just imagine, those old Westerns when they used to come out for the ranch hands. It's chow time. It's chow time. They say, well, Goldman Sachs, it's ready, right? And they point to the fact that this is very similar to the pullback we're seeing, this loss of momentum, right? And also they say the technical setup is just right. Now, of course, the only caveat they add is that NVIDIA reports next week, and that could derail everything. But other than that, they say they're ringing a bell.
Okay, before I let him continue on with his breaking news and the whole buy the dip, don't forget to like and comment and subscribe. Be careful with a lot of these. I tell you guys all the time, the news is into headlines and breaking news and stories, and you see all the slides and I mean, we're gonna get into this, and I'm sure he's got a bunch of graphs and whatnot. But for the average person, you and me, when it comes to buying dips and things like that, I'm not saying it doesn't work or it can't be effective, because I do think it can be effective, but I do think the average person day to day, it's not going to be the buy the dip person. You know what I mean? You're going to buy the dip and get hurt. In my opinion, and this goes for real estate as well. And this, again, just monitor dollar cost average. Don't get too cute. Same with real estate. If you looking for a deal, don't try to wait. Oh, I'm gonna wait for the market crash, which is buy the dip. Just take your time. Don't be in a rush. Don't be moved. It's like, and this is not, I'm not trying to give, I'm not giving you financial advice. I'm not telling you what to do. Just giving you my opinion on the stuff that I've done over the years. But just to give you my thought process, it's like when you see certain, to use a sports analogy, certain NBA players like LeBron or your Luca, they have a tendency, or even Steph Curry for that matter, all the greats, right? You name them. They have a tendency to slow the game down or speed it up, right? The game is at their tempo. They take whatever is given to them. That's the same approach you need to take in your investing journey. Don't jump just because everyone's doing it. And, don't try to feel like you're missing out. You have the FOMO thing going on. Just take your time, pace yourself. You'll be fine. You're not going to miss out on anything, because we're playing the long game here. You buy a piece of real estate, you should be looking at, what does this look like 5 to 10 years as a hold? Don't get into it as a quick, oh, I'm gonna buy the dip, try to flip this, but don't get too cute. Stick to the fundamentals. Look at your daily, what things are trading for. Find out average and try to beat average. It's not that hard. And I get so frustrated with a lot of news because uh, they put the stuff out there and people eat it up and people get hurt. And honestly, now is not the time to gamble. I don't think any time is ever time to gamble. But if you're worth 100 million, whatever, and you got play money, have at it. But for the rest of us, including myself, I'm just taking a step back and let's observe, do your homework on whatever investment vehicle you're doing, whether that's a business, stocks, or real estate, and take your time. There's nothing wrong with taking your time. Now, you don't want to go and fall into analysis of paralysis, but don't allow the game to speed you up. You work at your pace. And when you feel good about it, when you got all your ducks in a row, you're living on less than you make, driving an older vehicle, no, all these little ankle biter stuff is settled, no major life events happening in your life. That's the time, in my opinion, to invest. When you have a new child or job change or layoff or this and that and the third, you name it, those, in my opinion, are not times to buy the dip and invest and blah blah blah. I mean, they'll follow up this report with, I don't know, something crazy like, oh, massive layoffs, and it's like, this is why I don't buy into this stuff too much. So hopefully that was helpful to you guys. Let's just let him unpack this a little bit longer and then we'll see what happens. Don't forget to hit that like button.
As I've noted on this show for so many times, buying the dip, folks, is wonderful. It works. Only year it's worked better than this year is 2020, 2025. And by the way, I think it's worked really well since March of 2009. This has been a moneymaker. Now, of course, there's several problems for many investors looking to buy the dip, including the dip itself. It can be kind of painful. Here's the irony, though. The greater the dip, the greater the rebound. So this is like after 63 days, a massive pullback, 16%. But look at the rebound, almost 30%. Can you deal with it? Can you handle it? Is it worth it? And the question is, how do you actually buy the dip, particularly these tech darlings? Well, my next guest is here to help. I'm going to bring now Siebert Financial Chief Investment Officer Mark Mallon. Mark, in Axios today, you were quoted, and the first thing that jumped out at me was you talked about why is the stock down, right? That's where we begin. If we want to buy the dip, we need to understand exactly what we're buying. Explain the differences between the two risks.
Sure. So systematic risk is really just market risk, right? So all stocks move up and down with the market. And the idiosyncratic risk, that's based on risk associated with the company. So you often see situations where the market's down, and I'm sure you've heard the old adage that all boats go down with a sinking tide.
Right.
They all, in fact, do. There's this thing where, higher beta stocks tend to go down a little bit more than the market because that's how they work. And when the market goes up, they go up more than the market, right? And that's why you probably saw that effect of the chart that you showed just prior.
Right.
But in terms of what we look at, we want to always be watching, of course, for the idiosyncratic risk. The individual companies, has anything changed in the company? And that's the stuff that we focus heavily on.
Yeah, and it's interesting because a lot of my guests who come in and they recommend these higher beta names, I always throw out the caveat, if they don't, hey, you got to have a certain personality to own these stocks because, yeah, it can go up 30%, but it can also make some sharp pullbacks. So let's talk about this AI thing is, the reasons not to own AI winters, it keeps recurring. Not long ago, there was this notion that there's no way you could get the money back. You remember this, June 2024, the $600 billion question. Yeah, they're investing all of this money, but they will never get it back. And that put a lot of pressure, right? The AI bubble, this is ironically from Sequoia. And I think it's interesting because reading your notes, you think this is actually one of the reasons to buy these stocks, the value proposition of all the money they're investing in this stuff.
Yeah, I mean, look, it's easy to call this a bubble. I read stocks, a lot of.
I can't even finish this. I'm going to leave you guys a description in the below. Always try and give credit back to content creator, whether or not I agree with him. Shout out to Antoine Daniels. Again, you guys, be careful. I watch the news, and I pay attention to things, and because I think information is good, but I do think information overload can kind of get you a little anxious. What I would just say is slow it down. Remember the fundamentals. The fundamentals have never changed. I don't see them changing. Dollar cost average. Look at your market every single day and talk to professionals, talk to people who are doing it, consume YouTube content, and just stay on your square and ride the wave, ups and downs. If you already have money in the market and you're anxious, just ride the wave. It's, you don't want to buy low, or you don't want to buy high and then sell low. That's not a winning proposition. Same in real estate. You don't want to get into a situation and then feel like you have to sell. As long as the property is cash flowing day one, it's a good deal. That's my philosophy. If you're going to buy real estate, it needs to cash flow, period, point blank. I don't care what it is, a house, duplex, quad, triplex, apartment building, doesn't matter. If the math at the end of, after all my expenses are covered, all my maintenance, everything, pay myself, blah, 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 whatever your number is, you want 7%, as long as it's hitting that number, doesn't matter. I don't care. I don't care about a dip or not. It's always a good time to buy if you know your numbers and it's a good deal. Point blank. Please don't forget to like, subscribe, comment, and share. Appreciate you guys. I'll see you in the next one.